In this video, we are going to be discussing a very powerful topic, and the topic centers on how or what and how to trade during a risk on market sentiment. What this particular video will really help struggling traders, especially those that don't know what to trade, to be able to identify what currency pair or what asset to trade in a situation where we have a risk on sentiment in the market. What and how to trade during risk on sentiment. Though I have done a separate video where I discuss different types of risk or market sentiment overview, but so that somebody can really still get a better understanding, I'm going to identify a few things that you will look into to be able to ascertain that of a surety, we have a risk on sentiment in the market. So, and I'm going to do that very quickly. These are gauges, gauges or indices for risk on sentiment. So, first thing you want to look at is that your S&P 500 must have a bullish market structure. A bullish market structure. If you have our directional bias tool, you can use that particular tool on the daily. Once you have the price above the cloud, it's going to still point to the fact that there is a bullish market structure, and that's the first index you look into. The next one is the Nasdaq Composite Index, and that too must have a bullish market structure. Don't worry, I just want to quickly have this discussion at a theoretical level. I'm still going to go to the chart where I will show you each of these index and how we evaluate them to ascertain that we have a risk on sentiment in the market. And I will now discuss the assets that you will trade during a risk on sentiment based on the PMI trading system, and how we overview the market. So the next one is the Dow Jones Industrial Average Index. It must also have a bullish market structure, and of course it should be above the cloud if we have our directional bias too. The fourth thing you want to look out for is the VIX, the volatility index for the S&P 500. This must the index must be below 20. This is very important. Once you have the index below 20, is if an additional confirmation that there is a risk on. And lastly, you must ensure that the DXY also have bullish market structure. You know, and this is also expected to be above the cloud. If you have all these metrics or all these indices, itemized like this, and you confirm them, just like I'm going to check, before we move on, because fortunately we are currently on a pure risk on in the market, and of course, I'm going to look at few assets that we can trade, and if possible, I'm going to check if we have any signal or a live trade that I can call on this particular video. And having said that, at Potential Miners International, what we do to make our capital flow narrative exercise very easy is that we have identified the set of assets that we look into to make it very easy for us to evaluate currency pair or assets to trade. So we have what we call PMI majors. PMI majors. The first one is XAU XAU, XAU. That is what we call popularly known as gold. The next one is the BTC USDT, and that is Bitcoin. The next one So in our major, we have 7 assets that we look into. The next one is Euro USD. The next one is GBP JPY. The next one is CHF JPY. The next one is USD JPY. And the last one on our major at Potential Miners International is GBP USD. These are the major assets that we look at, you know, at Potential Miners when we want to begin our capital flow narrative, and which means if you have had or seen the video on capital flow narrative, this is what we do to be able to pinpoint what am I to trade. A lot of traders, they are struggling in the forex market because they don't even have a structured, pattern or framework of identify what to trade. They just get to the chart, they begin to look at candles, and they now begin to say, I'm going to trade gold, I'm going to trade GBP USD, without having a clear fundamental and sentiment overview of the capital flow narrative, which can really give you a level of confidence. And at a professional level, you can tell us why you are taking, or trading this particular asset at this particular time. You see, this is very important. And at Potential Miners International, our drive is that we want to ensure that we build a community of forex traders that will be trading from a professional standpoint, not from people that are just looking at forex as, let me just go in, let me see if I can just gamble my way and make few money and probably go and start other things, with the forex money. Is forex as a business is something you can start and you will do for a long time, only if you are doing it at a professional level. If you are not able to expose yourself to trainings that will really make you trade at a professional level, believe me, sooner or later you are going to burn your fingers in forex, and you will now conclude that forex is a scam. You will conclude that this is not going to work. But if you can really settle down and begin your journey and know what it takes to trade as professionals, you will trade in this market for as long as you want. In fact, this is one of the things that you can transfer to your children and children's children, because it's a skill set and it's knowledge based. So, and that's what we are pushing for at Potential Miners International. So, at Potential Miners International, we also have PMI miners. These are assets that we also look at, during our capital flow narrative, and especially when we want to follow a news event, that relate to any of these assets. We look into this one. So the first one is Euro JPY, and we do that, or we look at the minors after we have considered all the majors. In most cases, whatever signal you will see on some of these minors, you will still be able to pick such a signal on the major. So instead of picking on the minor, you will pick on the major. For instance, if you see a buy signal on GBP JPY and you see a buy signal on Euro JPY, given the fact that by the time you compare the interest rate between GBP and JPY, you will see a very wide gap in most cases. And that of Euro and JPY is better off that you pick the trade on GBP JPY. All other things held constant. However, if you have a trade or a news event, I beg your pardon, on Euro that can make Euro JPY to move, responding to the news, you can, instead of taking the trade on GBP JPY, because of the news event that is related to Euro now, you can now position on Euro JPY. So we have the major and we have the minor, and for the minor we have five assets that we look out for. The AUD JPY is another minor that we look at for at Potential Miners International. Then we have the GBP NZD. We also have number 4 GBP AUD. Then lastly, we have number 5 GBP CAD. Aside these assets that we have identified, we hardly go outside of this major category and minor category. So it makes our analysis so easy, for us. So let's now begin. If you are now, having said all of this, if you are in a risk on sentiment, what are you expected to trade? You know, what to trade, what to trade during risk on, or let me just say risk on assets, risk on asset selection. And I think it's perfect that way. So what we do is, after we have been able to ascertain the existence of pure risk on sentiment in the market, going through this particular gauges, these 5 gauges, we will now start our capital flow narrative, from the majors. So we ask ourselves, if you have a risk on sentiment, what or how do capital flow in and out of gold? So we want to ask ourselves, this number one, are we picking trade on gold? If we are to pick trade on gold, what type of trade or what direction are we going to be looking at for? So X AU USD, say gold, what are we going to be doing on gold? I mean, what direction are we going to be looking at? So let me explain what will happen when you have risk on, what will happen to gold predominantly. And that is what is happening to gold at the moment. When you have a pure risk on sentiment in the market, what that means is that investors, they have a level of confidence in the investment environment, and there is no fear, of any sort. There is no panic of any sort, that the investors can be looking into saving their asset or capital in a safe haven. So because there is a level of stability in the market during risk on sentiment, investors will move their money away from safe haven, and gold is one of the safe haven on a global level. So if there is a risk on, if you have confirmed that there is a risk on in the market, the likelihood that capital will be flowing out of gold is very high. I want you to take note of the terms I've been using. In the forex market, every analysis you want to do is to just buttress the likelihood, clause. So for gold during a risk on, the likelihood that there is going to be an outflow of capital from gold is very high, which means on gold, the bias at Potential Miners International will be to sell. This is biased because when we get to our technical storyline, we'll now see if gold is in alignment with all our conditions. That is when we will be selling. It's not that when you have a risk on and because the bias is a sell, you will just go to gold and begin to sell. Currently, we are in a risk on, and this is 28th of October 2025. We are in a risk on, and gold is doing what I call correction based on the sentiment of the market. And on the daily, you have a bearish market structure currently. But it doesn't mean that we'll go to gold and begin to sell, because we need to check all our conditions for the technical storyline. If you have not seen the video, you might need to search for it. Is the capital flow narrative part 2. This is the video where I explain the technical storyline of our capital flow narrative, and you must identify each of the conditions before you can now begin to sell on gold. But because at Potential Miners International, we want to have a valid professional narrative for whatever action we are taking. Currently on gold, we will only be looking at selling if gold can meet the condition for our technical storyline. Do you get that now? So what will happen to, don't forget, we'll look at the majors first, then we overview the minors if we have enough of time. And of course, if we have been able to pick trade on the majors, the minor might not be necessary for us at some point, so that we will not pick almost the same trade under one condition. So BTC, well, BTC USDT, what are we expecting? This is Bitcoin now. What are we expecting for Bitcoin when you have a risk on? Now, this video is not because the market is currently on a risk on. Anytime, any day, any year, the market changes based on different, policy shifts, based on a lot of, changes that can happen on the global front at the national level in the economic indicators. So anytime you have risk on, this is how you approach the narrative of capital flow. So when there is risk on, I want you to do your due diligence research to confirm some of these things I'm saying. When there is risk on, the likelihood that Bitcoin will be buying is very high. When you have risk on, so the buyers on Bitcoin will be buy buyers. For gold, we have sell buyers. You see that now. So when you get to any of these assets, you will not just be taking decisions blindly. You already have a narrative that is giving you a bias of, so if the technical is now in line of this narrative, then you can now take position. And if you can do all of this, the likelihood that you will have your hedge play out is very high. Likelihood is very high that you have your hedge play out, because you have a capital flow narrative that is well explained, that you are trading from a global perspective. You see now. So let's just continue so that we overview all the majors. I will just overview the majors for you, because the minors, they are minor, just like I said. We only look at them if need be, especially when there's going to be news events. So I'm going to focus on the major. So, and we'll now probably see if I can pick any trade based on our analysis. So number 3 is the Euro USD. So during risk on, we expect that capital will be flowing into USD. If you have seen the video on market sentiment overview, I mentioned that we have 4 different types of sentiment overview. We have risk on, we have risk on dollar aversion, we have risk off, then we have risk off dollar aversion. So when you have pure risk on, what it means is that there is confidence in dollar at that point. So, and if you now look at the interest rate of dollar, if you notice that the interest rate is high, it now make the reason for capital to flow into United States dollar very, very, very strong. Because technically, when there is confidence in the US dollars, an average investor want to invest in the United States, because this is, US dollar is the king of the market. So when there is confidence in favor of US dollar, capital will flow into an economy that is stable, into the leading economy. You see it now. So if you have a risk on sentiment at any point in time, at any point of the year, when you have confirmed that there is pure risk on, you expect that the bias on Euro USD will be a sell. What I'm giving out as information, these are pure premium information. But I feel that people need to now begin to see that trading is not just for the boys, for young people that they don't have probably other things to do, that you can begin to do this, even with your big capital at a professional level, without fear. And that's what we are trying to to push out to the public at Potential Miners International. So for Euro USD, the bias is a sell. So at no point for now, if the risk on continue, remember that the market can be on a risk on for this week, or for 2 weeks, or for 3 weeks, and after a while the sentiment will change. So it means that on the average per week you should overview, or per week or per 3 days you should overview what is the market sentiment. You see now. Some sentiment can stretch into 5 months, into 6 months. Dollar, as we have been experiencing risk on dollar aversion since February. So February to October, you can see a space of like 7, 8 months. You see it now. So when you overview your market sentiment and you ascertain it, that is when you can now begin to look at the technical, to look at the candle. That is when the candle movement can make any sense. So for now, today is 28th of October 2025. Based on our indicators or our gauges, we have ascertained that we are on a risk on market sentiment. So Euro USD, the bias on Euro USD is a sell. You are not expected to be buying on Euro USD, especially when you are trading with PMI trading system. So whatever strategy you use, you might, maybe you have a way of scalping or something like that. It might work out for you. But if you want to trade with PMI, global macro trading system, your bias for US dollars, Euro USD, I beg your pardon, is a sell bias. So when you get to the chart, you want to expect the technical storyline to be in alignment with a sell bias before you take a trade on Euro USD. You see that now. Number 4, we have GBP JPY. Good. Now, when you come to GBP JPY, you might need to ask yourself, what is the position of GBP in a risk on? In most cases, if you are not careful, you can confuse the position of GBP during risk on. Why am I saying this? If you see GBP USD, the bias for GBP USD will be a sell. This is because there is inflow of capital into United States dollars. So that inflow of capital into US dollars is going to, there's what we call the drag effect. It's going to drag GBP down. Are you getting it now? But in the case of GBP JPY, currently the interest rate for GBP is 4% and that of JPY is 0.5%. So during a risk on, it is expected that capital should flow out of a low yield currency. Most of the time, these low yield currencies are safe haven currencies into an high yield currencies, which means a low interest currency into a high interest currency or economy. So during a risk on of a sort like this, we are expecting that GBP JPY should still maintain a buy bias. I hope you understand what I've explained. Because if you get to GBP USD, the bias will be a sell for GBP USD. Are you getting it now? And of course, if you look at the interest rate of GBP, which is 4%, and that of US dollar, which is 4.25, if I'm not mistaken, let me quickly check. Yes, if I'm not mistaken, uh, you follow data if you want to trade. There's no, you see now, US dollars now, currently the interest rate is 4.25. That of GBP is 4.00, which is 4%, which means that even if capital will flow from the standpoint of what we call carry trade, capital should be flowing away from an economy of 4% into an economy of 4.25. Are you getting it now? But now, for GBP JPY, you should know that the interest rate for GBP is very, in fact, the interest rate divergence for GBP JPY is very wide. So on top of it, JPY is a safe haven currency, and during a risk on, capital is expected predominantly to flow away from a safe haven currency into an high yield currency. You see that now. So you don't just pick an asset and say, I feel like buying or I feel like selling. You have to explain or pinpoint or evaluate the capital flow narrative. You see it now. And this is from a professional standpoint. You will never see any forex trader that doesn't really understand some of these things or that is not really learned, from the standpoint of data, to be able to tell you the capital flow narrative. In fact, it doesn't make sense to them. They just want to look at the chart and take a position, which is why a lot of the time they will end up blowing accounts, end up being frustrated, and they will conclude that forex is a scam. You see it now. So for GBP JPY, we have a bias. Now the second one is the number fifth is CHF JPY. This is very interesting now. You might now be wondering what will be the bias on CHF JPY. You see, when you get to CHF, you really need to be very careful, because if you are not experienced, you might confuse what the bias will look like. But at Potential Miners International, we follow data and we follow economy, and we look at the standpoint of each economy vis-a-vis other economies. Are you getting it now? Currently, CHF has 0% interest rate, and this 0% interest rate, is expected ordinarily to mean that capital will be flowing away from CHF technically. But because when a country has 0% interest rate, among other countries, I mean the majors now, what that means is that that country is the safest safe haven country when it comes to forex trading. Let me repeat that. When a country or a currency maintains 0% interest rate, more than likely, when there is a panic in the market, investors will prefer to save their money into such a currency as compared to other currencies during panic. So what that means is that CHF is the safest safe haven globally now because of the 0% interest rate. So it now means that even when capital will be flowing out of the safe haven, the flow of capital out of JPY will be faster than that of CHF. I want you to take note now. The flow of capital out of JPY will be faster than that of CHF, which means that if any investor will still, decide to retain any of his capital in the safe haven, they will prefer to retain it in CHF with 0 interest rate than JPY with 0.5 interest rate. I hope you understand that. These are premium information, no doubt about that. You might not really get some of these things, but for PMI, our bias for CHF JPY is still a buy bias. On top of it, when you notice that when you get to USD JPY, you will notice that clearly during a risk on, we have said it that there will be a capital flowing into US dollars, but because it's a stable economy and because the interest rate as of now is very high, and the capital of course will be flowing out of JPY that has very low interest rate, and it's a safe haven, and it has not attained the level of the safest safe haven. You get it now. So USD JPY has a buy bias. This is not something you want to contend with now. Now when USD JPY is buying, there is what we call drag effect in forex market. CHF JPY too is going to enjoy from the drag effect of the USD JPY. The same thing for GBP JPY. Are you getting it now? So for USD JPY, the bias is still a buy. And let me go through the last one, which is going to be GBP USD. Now for GBP USD, our bias is going to be a sell. I think I've touched on this, before while I was discussing GBP JPY. So now these are the majors, and this is what we look out for. We will now, based on this understanding of the bias, we will now go to the chart to say, let us look at the chart. Let's see any of this asset that will now have alignment between the capital flow narrative from the fundamental storyline, sentiment storyline, and the technical storyline. Now, let me now quickly go into the chart. Let me pick one. So for me, Let's just overview any of, let's start with gold. This is gold now. This is gold, and what we'll do, of course, we want to see our directional. We have said that gold should sell. Our directional bias should be on the sell before we sell. So currently, gold is still on a buy directional bias, although it's selling. You get it now. So we cannot take a sell position on gold because on the weekly, where we gauge our directional bias now, you know, capital flow narrative bias is what we have explained, the what I explained in the previous, last in the few minutes into this video. What we are now looking at is the directional bias on the technical, based on the technical now. Are you getting it now? So we can now see that for gold, the technical is not in alignment of a sell bias. So we are not going to do anything on gold. We are not going to do anything on gold as of now. Are you getting it now? So let's see BTC. This is going to be very interesting now. I think I saw a trade on BTC that I marked out, but we are expecting it. Now on BTC, we say the bias is a buy. So our directional bias is saying we should buy. Very interesting. When you go and now look at, let me, so that you can see it. Don't forget, at Po ten tial Miners International, we have tools that we use. We have a tool that helps us to identify the directional bias. We have another tool that helps us to draw the market structure. There is a way we set up some of these tools. If you really need them and it's something you can make a request for, it's going to be free. We are not going to charge you. So on the Bitcoin, we have a market structure in favor of the buy bias on the daily. So we can now say, okay, we have the directional bias to be buy, the capital flow narrative is buy, the directional bias on the weekly is buy. You see it now. The daily, the market structure is still giving us a buy market structure. You can see this break of structure. You can see this change of character, I mean to say. You see it now. So it means on Bitcoin, we can now go to our 4 hours. Let's see, do we have any, do we have any other block? This other block look interesting for me, and this is another other block that look interesting. You see it now. So for Bitcoin, this other block is giving us an engulfing move now with 2 consecutive candles. So we can position here for a trade on Bitcoin. This is like a live trade now, although you might not need to pick it if you don't really understand our trading system. Before you can take a trade with anybody's system, you should understand the risk management overview of that particular system before you just take one trade. At Po ten tial Miners International, you must understand that we trade in clusters, which means that before you take a trade, when we call any trade, you must divide your capital to minimum of 20 places, which means you are trading with 5% risk management, which is the highest for Po ten tial Miners International. The aggressive risk management is that you trade 5%. It means you are overly aggressive. Recommended risk management is 2%, while conservative is 1%. But if you are aggressive, you can trade 5%. Of course, when you are taking the trade, this is cash flow trading framework now. This is cash flow trading framework. So we have recommended that you can trade 5% on your cash flow, because this is where we are expected to pick trade maybe during the day, during the week, so that we can have cash flow that we can still sustain on. So, but if you are taking trade on investment, you might need to consider maybe 2% is advisable. But this is a trade that we are looking out for. I've set it. I've even set depending on our live account. If this trade comes back and pick us here, fine. If it doesn't pick us here and it stop us out, if it comes to this particular this cash flow money box and it give us an engulfing move, we are still going to take this trade. This is an example of how we take trade So we are waiting for Bitcoin now to come and pick us here and give us ratio 1 to 3. You just trade with a relaxed mindset. So this is how we trade during the risk on sentiment. If you really want to have an additional or extended explanation or training on this, you can reach out to us and then we'll negotiate them, begin to show you pathway to profitable trading in the forex market. Until I see you in the next video, I remain Mr. Kimbode Damilola, the king of waves. Thanks for listening. God bless you.